Good morning, traders. It's Monday, May the 26th, and the markets are waking up to a fresh round of geopolitical chess moves and commodity price swings. Let's start with the big picture. Global risk appetite is subdued. President Trump's proposed 50% tariffs on EU imports, now postponed to July 9th, have given us a brief window of calm, but the threat still hangs over the market. Over the weekend, Trump also floated a 25% tariff on Apple iPhones made outside the US. The House passed his tax and spending bill, which gave US equities and the dollar a temporary lift, but uncertainty is the name of the game. On the geopolitical front, tensions in the Middle East are simmering. Reports of a possible Israeli strike on Iranian nuclear site sent oil prices soaring above $64 before OPEC's talk of a July production increase dragged WTI back down to $61. The OPEC move is a clear signal. They're watching demand and not afraid to open the taps if needed. Meanwhile, US-Iran nuclear talks are ongoing, but progress is slow and the market's watching closely for any sign of a breakthrough or a breakdown. So let's break it down by commodity. If you're trading crude oil, keep an eye on OPEC chatter and the US-Iran headlines. The temporary reprieve in US-EU trade tensions has buoyed prices, but the potential for a supply glut is real if OPEC hikes production again in July. If you're long, tighten your stops and look for quick profit-taking opportunities on new spikes. If you're short, watch for any escalation in the Middle East. Headline risk is high. And you'll want to hedge with options or spreads. Natural gas is a different beast. US futures are above 3.4 MMBTU, driven by lower daily production and strong demand forecasts as we head into summer. Maintenance on key pipelines and LNG export facilities has tightened supply. If you're trading gas, think of scaling in on dips, especially if forecast shows an early heat wave. But don't get complacent. Rising LNG demand could reverse quickly if export disruptions persist. Gold and silver dipped this morning as the tariff delay took some pressure off, but analysts remain bullish given the persistent economic and geopolitical uncertainty. Gold is still up 30% year on year. If you're trading gold, think of buying in dips, especially ahead of US GDP and consumer confidence data later this week. For silver, stability is the theme, but keep an eye on industrial demand and any sudden moves in the dollar. Base metals are mixed. Copper is up on tight supply and record Chinese concentrate imports, while aluminium's down on higher Chinese output and rising LME stocks. If you're in copper, think of holding longs but be nimble. Chinese demand is the swing factor. For aluminium, short-term shorts could pay off if oversupply persists, but watch for any surprise policy moves out of Beijing. And lastly, on the ag side, soybean meal and rapeseed meal are up in China, while eggs and pork are down. If you're trading ags, stick closely to the data. Volatility is high and supply chain disruptions can turn the tide fast. To wrap it up, this week is all about staying nimble. Geopolitics are in the driver's seat and every headline counts. If you're trading, use tight stops, monitor position sizes, and don't be afraid to take profits quickly. And remember, risk management isn't just a buzzword, it's your best friend in markets like these. Let's have a strong week out there.